think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. This video today is brought to you by the Rules Symposium. The Rules Symposium is hosted by legendary natural resource investor Rick Rule. Be sure to click the link in the description to check out that event. It is from July 26th to the 29th, and I hope that you all get a lot of value out of it. He has a lot of key speakers coming, a lot of CEOs of mining companies, and brilliant minds within the natural resource investing space. So be sure to check that out. Today, I got a special guest. He reached out to me via email. He's had found some of my videos, and I'm glad to have Giorgio of Avanguardia Investment Media on the channel. How you doing today?
I'm doing great. Thank you, Daryl. That's a pleasure to be here. A great opportunity. Thank you.
Yeah. So you're a macro, analyst, and you really like the macro environment, and you're also heavily involved on TikTok. We talked about TikTok and how I could use that platform or whatnot. What drew you to macro? What drew you to this particular space?
Okay. So what drew me to macro? First of all, I think it's the most interesting thing. So I like to see things from the higher picture. I like to see things from above, and also it's interesting to see what really moves the world. And so I feel like macro can give more perspective to make sound investing decisions. So that's for sure something that really interested me. And so I started learning and researching all about liquidity.
Okay. That sounds like something that's very important, because we want to see like where our money is going and what direction the world is headed economically, or our country is headed economically. I mean, when you look at historical events, like whether that be the Great Depression or Weimar Germany or hyperinflation in certain countries, like if you didn't understand the macro, then you were pretty much screwed.
Exactly. I mean, there was probably not a lot you could have done watching, I don't know, like technical charts in Weimar Germany or something. Of course, I mean, the technology was different and everything, but macro, I feel like it's something that helps you understand and have a better perspective to make decisions.
So now you're into macro, and what was kind of your background and what drew you to it? Obviously, it affects our money. It affects how we invest and how we think about money and such. But what was that turning point where it's like, hey, this really fascinates me?
So my background is mainly business. So I've been doing online business for 5 years now. And of course, when you do that, you are always money is important, because the money, it's everything. And also it's important how people feel about money and how people feel about the economy. Many times, so I used to deal with Italian customers, and many times it's like you hear, oh, but I don't know about doing an investment right now because the economy is there, or the economy is there. So it's always indirectly something that affected me, but I didn't realize it. And so I was always interested. And then I was like, yeah, that's probably something I want to learn more about. I want to be more, I want to study more. And so that's
good. Yeah, that's good. Having that background of being in the business, knowing money and having to bring in money and all those different things. Like, you're interacting with money so much that it's good that you understand it and understand the mechanics behind it. So you currently have a YouTube, Avanguardia Investment Media, and then you've also been starting to boom on TikTok as well. So what was kind of that turning point for you from going from YouTube to TikTok? What type of audience is on TikTok that you're reaching there too?
Okay, so the audience on TikTok really surprised me. So like at the beginning, I thought, okay, I'm just gonna try to publish some videos here just to try. And okay, my audience, my ideal audience is about investing, macro news. So I talk about news in the world, and I thought, okay, probably there is not that much of an audience on TikTok because we all have that conception that TikTok is just about 14 years old teenagers scrolling through like soft porn or like some like weird DIY videos, you know. But actually, a lot of people are there. A lot of like older people are there, and that surprised me. And a lot of actually informed people are there, or people that I have strong opinions about finance and macro. So like I found myself like talking about really specific topics, and the video would do well because people are interested about it. So I can do like a video about interest rates or the Fed fund rate or this like the financial stress index that the Federal Reserve has created, and people would be interested to it. And that's something I was surprised, and I'm liking it because I feel like it's a new platform where content is much shorter and people can engage more freely. At the same time, what I'm finding out that there is a lot of meme investing culture on TikTok, and that's something I want to avoid for sure. And actually, my goal would be to try to inform those investors and those people with different ideas that come from platforms that usually they don't spend time on. So many times I would like spend my day doing hours of research on Twitter, on Bloomberg, on different news articles, reading reports, and then I would like try to find the most interesting things, the ideas that are more that I think are unique and they are like interesting, and I'll just try to do like a short video about them and then like publish it on TikTok. So those people that usually don't have access to this information can have access to this information and be okay, oh, okay, I can, there is something else rather than like, I don't know, GameStop, AMC, and just like buying crypto with like not even knowing why, you know. That's my ultimate goal, to like try to bring something different to that audience.
Yes, it seemed like when the short squeezes were happening with AMC and GameStop, and then we saw Dogecoin, just go up 1,000% or whatever, however much it went up. That Reddit and TikTok were like credited with a lot of that kind of where people were getting that information from. And so that's kind of what interested me about TikTok. It's like, okay, who's on there informing people? Because like some of the people like we listen to, like, whether we listen to Rick Rule, Lynn Alden or whatnot, like, I don't know. I don't really think they're on there. I don't think they're on TikTok as far as like a personal page, or if they do, they may be on there for entertainment or stuff, but they're not on there for like investment advice or whatnot. So it just shows me like there's another like kind of audience there that's seeking, to understand, money and finance, but they're not, watching the hour-long interviews on YouTube or listening to the hour-long podcast episodes or whatnot.
Exactly. So it's a different audience. I mean, mostly what my understanding, my idea is that people go on TikTok to be entertained mainly. So it's like how I see TikTok more as a Netflix than as an Instagram, for example. So you go on Instagram and you share pictures of yourself with your friends. You see stories about your friends. You go on TikTok just to be entertained. You're at a bus stop. You have to wait 20 minutes. You just scroll through endless For You page that just like provides like something that will eat your dopamine and give you your hit for the day, and then you're satisfied. So that's something different, and it's really addictive. And
Yeah. So it sounds like even with TikTok, it sounds very similar to Twitter, because, on Twitter, you got this thing called FinTwit, finance Twitter.
Yeah.
And people are getting like these short threads of like macro concepts, that are like, obviously if you want to like understand the full thing, or like the whole thing, you got to go read, you got to take 20, 30, 40 minutes out your day to go read or like listen to like a full podcast on that specific, type of information. But like Twitter gives you that quick hit of like that financial information, but it's not in a video form. It's not, and you have, visual learners who learn more from watching videos, and you got people that, learn more from reading. And so it's pretty interesting.
Yeah, and I mean, something I'm testing out, and probably you should too, is like to try to make short clips and also try to publish them on Twitter. I know it's like weird, people don't usually do it, but especially because most people that are on Twitter, like CEOs or like fund managers or like high profile people, they would never like be like, okay, let's like make a video with my phone and like cut it, edit it. They're just like trying to give out a message and write it down. So if you do that and you're a content creator, you could have like a little hedge, and that could work. I mean, I've seen people doing it with success, but yeah, that's something interesting. I would test it out, and probably you should or you could give it a try.
Yeah, for sure. So jumping back into like, kind of macro, what type of environment do you feel like we're in? So you're over in Europe, I believe Portugal,
Yes.
and you're Italian from originally,
Yeah,
right?
I'm Italian from Rome, and I mean I lived around. I lived in Dubai, I lived in London, but now I'm like pretty based in Portugal, and I
Yeah,
lived in
yes. So
Lisbon.
you've been to
Nice
more
place.
countries than me, man. You've been to more countries than me.
But
Uh,
America is big, so I mean, also just traveling through America, it's like traveling through Europe, you know.
yeah, for sure, for sure. So, so what's kind of your take on, obviously, the world revolves around the dollar, the U.S. dollar. So even when I'm hearing like people from other countries, they're talking a lot about the USD, and U.S. financial assets. But you do have emerging markets and all those different things. So you being from Italy, I'm sure like you're seeing like the debt rise there. I've been reading more about like the debt to GDP a little bit there. Um, and just looking at their financial situation, we're seeing a lot of inflation over in Europe, with the European Union and everything. So like, kind of what's your take on like that space over there, and kind of how are you positioning yourself based on these different macro factors of what's going on in Europe?
Thank you for this question. I feel like it's Europe right now. I feel it's the biggest risk to the world economy that nobody is paying attention to, because Europe is big and has a lot of problems, more than people think. And if Europe fails, a lot of things fail too. And right now the situation is really difficult. And so as far as for positioning, I'll be really transparent about it. Right now, I'm shorting the euro with my personal portfolio. I'm shorting the euro against the dollar, and I'm long the dollar against all most major currencies. And at the same time, I'm shorting the US market. I mean, I would short the Italian market, but I would prefer like shorting some more liquid names in the US just for like liquidity. And but the main problem right now in Europe is that it's the whole Eurozone, the whole European Union. It's all like a thought experiment. All these countries that had a lot of differences, a lot of different cultures. They came out of World War II and they were like, okay, we need to avoid that. We need to make sure that we don't go into something like World War III. And since Europe is the center of the last two major wars, they were like, okay, let's unite together and let's trade with each other and let's avoid any major conflict. Because the more we are united, the less there is the chance that we can start a conflict with each other. I mean, we are seeing the same thing even with Russia. A lot of people thought, okay, let's build all these pipelines that connect directly Russia to Europe to bring the gas, so that there is economic incentives from both parties to not start any conflict. Same thing with like most of the trade that we do with China. But at the same time, we lose our independence. And so Europe right now is in a weird position where interest rates are negative. At the same time, inflation is at 8% in the Eurozone. And the central bank is trying to like really take most time that they can to avoid raising interest rates, because they need the low interest rates to support these really bad financed countries that are in Europe, like Italy, Greece, Portugal, Spain, Cyprus. All these countries, they have really high debt to GDP ratios. They don't have trade surpluses, and they need debt to continue running the country. So having a higher interest rates, they will create big problem for them. And the problem in Italy, not in Italy, but in Europe, is that you cannot have 5 European countries failing and think that the euro would like remain strong and remain intact. Like things fall if like 5 major countries inside the European Union fall. So that's the big problem right now, is that the central bank is completely trapped, because on one hand, they need to keep interest rates low to try to make these countries run, even though they should have failed a long time ago. And at the same time, they need to fight inflation, which is even worse with the war. And there is a major energy problem. So if they raise interest rates, countries in Europe will go bust and the euro will go bust. On the other side, if they don't raise interest rates, inflation will be raging and the euro will go bust even more. So in my view, personal view, the euro is toast. No, like there is no way out of it. I mean, unless there is something magical happening, the euro is not really in a good position against the dollar right now, not at all.
Yeah, that's very. I mean, it's probably a worse degree over there, you know, because over here we just started, you know, the Fed just started being hawkish or whatnot, and I know that, you know, different nations like China, they started kind of doing their tightening process earlier, you know, and we can talk a little bit about that. Because I am into some of the Chinese equities, because I think they've been getting killed for a lot longer than the U.S. equities, and they may be a leading factor as to when, you know, the next bull market occurs or whatnot. And so thinking about that, so Europe, the Eurozone, they can't raise the interest rates. Is a lot of that due to the amount of debt that a lot of the countries have accumulated there?
100%. That's the main problem. Like the main problem is that they have been lowering interest rates to stimulate the economy that would not have been so strong, as strong, without these low interest rates. Even thinking about having negative interest rates, it's like nobody in their right mind 70 years ago would have ever think that any country would have tried to have negative interest rates. And like the idea is like you lend money to the government and they give you back less money to you. That's the main idea. Like you have negative interest rates in the bank deposit. So in Italy, most banks, they will absorb the negative interest rates. Otherwise, people would like just pull out the money. But otherwise, you have like a negative interest rate on your cash account. So, for example, I had a Swiss brokerage account, and they were like really direct to me. They were like, because Switzerland, of course, has also negative interest rates. they were really direct to me. They were like, okay, if you are not going to be invested in the market right now, because there was a period when I really wanted to just stay in cash to wait opportunities. So they were like, okay, if you're not going to invest money, we're going to charge you 0.75%, because otherwise we are getting charged. So we need to charge you just to keep the money.
Oh wow, yeah,
that's weird if you think about
it. that makes a lot of sense as far as like, looking at like the negative interest rates. I mean, because we had the same issue here, because after the 80s when when Paul Volcker, fought inflation and let the interest rates rise to, I don't know, close to 20%. Back then, like, eventually the bonds and like CDs, and then you had the savings and loans and all of that, they were paying super high interest rates. And, talking with some of the boomer generation, they're like, yeah, I used to get, 8-9% on my savings, my savings account. And just thinking about that.
Now it's like not even 1%. Yeah.
Yeah.
What?
yeah, for sure. And just thinking about that, like, I mean, that was just cake, just easy. Like, all you got to do is just keep money in an account, and you were getting paid, a lot just to keep it there. You didn't have to take risk with the market. You didn't have to, like, understand like these different topics. All you got to do is just go put money in the bank.
Exactly. And that's something I feel like you touched a really important topic. I feel a lot of this speculation that we are finding today in the broad retail audience is due to the fact that people need to find a way to make money, and there's no straight way without risk to make money today, because interest rates are so low and people have they're like, okay, if I put it in the bank, I'm losing to inflation that is 8% a year. So what I'm gonna do? I'm gonna invest in the market.
Mm-hmm. Yep, exactly. And so we're all trying to beat inflation for sure. So there's been like a couple like things like I never really understood, like in terms of, I didn't really do a lot of research, but I know there were like countries like Greece where they had I think it was Greece, where they had a financial collapse. And that was what, like, I don't know, 6 years ago or something. So like, how do y'all treat like, well, I know you can't speak for everyone, but like, what is the sentiment about like money? Are people like rushing to dollars and just trying to be diversified in that way? Or are people like getting into gold or more Bitcoin? Like, how are people protecting their purchasing power?
I feel that the worst thing here is that people, they trust the government and they trust the central bank, and they believe what they are telling them. So when they told them inflation is transitory, you don't have to worry about it, we can like fix it, people are like, okay, I'm just gonna keep in euros in my bank account. So if you talk to the average European person, I'm not talking about investors that do that for a living, I'm talking about just the average person, they just keep cash and that's it. And a few of them, probably retail investors, they try to gamble some money onto some crypto and to some meme stocks, but that, of course, that's just gambling. But most people, they just keep it in cash, and they will be the ultimate. I mean, right now, probably it's not that bad to be in cash with the market correction. But at the same time, the euro would not be my preferred currency to keep in my cash account for sure. I would stay away from the euro.
Yeah. I've been seeing some alarming stuff like that, and I saw like the ruble like just bounce back. I wish I could have speculated on the ruble, but I mean they shut down our ability to be able to like trade that and stuff, and I did get into the stocks. I still have the stocks, the Russian stocks, but I wasn't able to speculate on the ruble.
Yeah, the ruble, it's an interesting thing because a lot of people are like, oh, the reason why the ruble has recovered so much so quickly is because it's just like manipulated, it's controlled. But the fact that many other countries have tried it but failed, like look at Venezuela or other countries like that. So it's like, it's not always that easy to protect a currency.
Mm-hmm. Yeah. I was seeing that, and especially with the energy, like I'd show like the map of like how much like pipelines go from Russia into the other nations, Germany and through Poland and Turkey and all these other places, and I was just like, wow, they're supplying a lot of energy to those nations, and yeah, so it was pretty it's pretty interesting just seeing like I've had people talk about like Doomberg talks about energy is life, like if you don't have energy, then you're gonna be in trouble, and so yeah, it's amazing to see how their currency was doing so strong just because they had that leverage. So speaking of like the Chinese equities, so obviously for me, like I don't like agree with like how China goes about things, but I know that the Chinese equities have been cheap for a long time, and they've been more in a tightening environment for a little bit, and then now they're probably starting to ease. I think they started cutting interest rates again or something like that. What's your take on the Chinese equities and kind of where those are?
Of my opinion on Chinese equities is they're cheap. They may present an opportunity for people that know how to hedge risks. But at the same time, I would personally stay away from it because we don't know. We have entered with this Ukrainian war. We have entered a new chapter in the history of the world that we have no idea how it's going to end. And so we could see easily. Yeah, so I would not be surprised if China right now would made a move on Taiwan. And that would make Chinese equities completely uninvestable. There will be a scenario in which Chinese equities get delisted from the New York Stock Exchange, and you would be probably in the same position that you're in now with your Russian equities, right?
Yep.
Yeah. I mean, how's that holding up?
Man, it's weird because like I saw like Lukoil, I saw the price of it in rubles, and it's bounced back to because the ruble, strengthened or whatnot. It bounced back to I think it was about $65, and my average is about 13. But I'm unable to do anything with it, So it's like so hopefully, I posted that video with Rick Rule about the Russian equities and just like, okay, well, what can we actually do about this? He's like, hopefully, they'll come out and say, they'll reinvest the dividends for us or something, and so it's good. But, it wasn't a life-changing amount of money, that I invested there either. But I just know like, from listening to, Jim Rogers and some of the, well-known investors about investing in a crisis situation when equities become so cheap. And, I'm holding it for the long term. I mean, if, a decade down the line or something, or however long, this clears up and then those equities are able to be tradable again, I may make a lot of money, who knows? So I'm kind of just like, speculating because they were so cheap.
For sure. I mean, for sure, it's an asymmetrical opportunity which you can risk a little to make a lot. I mean, you said your cost basis was like 13 and now it's sitting at like 65 or 63. So that's, I mean, already like fourfold or sixfold almost. So, but at the same time, I feel what's really important is to communicate to the audience, to the people out there, that it's always important to have to place small bets, because I feel a lot of people, like, they will see, I don't know, like an interview with Rick Rowe in which he says, oh, I'm liking like I like to take risks and I like to speculate on the Russian stocks right now because they're cheap and they could be a good opportunity. But that doesn't mean that he put 100% of his net worth in it. It's probably like 1%, 2% maximum, and at the same time, somebody else would be, okay, nice, I can like gamble it and would like push all in into that bet, So I feel a lot of times it's important to understand that no narrative should be pushed 100%. And in life, we don't know what we don't know. And the unexpected, it's always there coming for us.
Yeah, for sure. Yeah, that's real. So what are you looking at any type of emerging markets? So I was looking at the .com bubble when all the tech stocks crashed. I think they have a longer ways to go. The Fed just started tightening. They're going to be raising interest rates even more. And a lot of these stocks have already corrected a lot. So I'm kind of just trading the market. I'm not buying and holding really any positions unless I'm like dollar cost averaging with like partial shares or whatnot. But I noticed like in the .com bubble, after that bubble popped, commodities and emerging markets really had their strong time. So are you looking at any emerging markets right now?
I agree with you 100% that commodities will be the next main thing after this recession. Because my expectation right now is the following. The Fed is going to tighten because they need, for political reason, to raise interest rates and fight inflation. Jay Powell and the president, Biden, met recently. And yeah, so last week, Jay Powell and Biden met, and Biden was really clear, and he said that he was going to let the Federal Reserve be independent as it should, and he would let them do what they need to do to fight inflation. So we know that they need, for political reasons, to fight inflation. And this means shrinking the balance sheet at the fastest pace in recent history. At the same time, raising interest rate at the fastest pace since 2000, which exactly was the dot-com bubble. So in the short term, what I'm seeing is actually the opposite that everybody is expecting. So everybody right now has bought the inflation, hyperinflation story, like everybody's like, oh, you need to protect, otherwise we would go into Weimar Republic. But I feel like in probably the next 12 months, until we end completely this process, we might see the opposite. We might see prices going down as we go into a recession. So if I would have to compare this situation, I would compare it with 2008. If you go back in time, you see and you watch what commodity prices did before the recession of 2008, they were just like climbing, inflation was climbing. People were just like really thinking the economy was going to go into stagflation or inflation with really high inflation. But then the opposite happened. And we had deflation and a recession. But then the response of the government has been in the past and will be even this time to inject liquidity back into the system. And that's when I really believe there will be the best buying opportunity for commodities. And I would personally look into energy, gold, precious metals, but even like normal commodities, just like soybeans and potash and things we need, things that we need and are just real.
Yeah, for sure. And that's kind of interesting you say that, because like I can see how it relates, because so I follow Lynn Alden's work a lot, and she talks about this period of time being heavily related to the 40s, with the debt to GDP being this high, and then the Fed trying to raise rates and trying to fight inflation, but ultimately inflation wins, and they have to inflate the debt away. And so like I can see like how once this recession happens, if it happens, I mean, some people are saying it's avoidable. I think it's inevitable. It's just all about timing. But once this happens, then we'll begin to see like inflation, commodity prices, begin to skyrocket even more. And so that's kind of like why I am positioned, longer term in a lot of the dividend paying commodities, energy stocks, and such. I'm into uranium too, but I need to have like, cash as well to be able to take advantage of if we see a bigger drawdown in a lot of these equities.
Exactly. I feel like the fear of missing out keeps a lot of investors right now invested for the right reason for the long term, but not the right reason for the short term. So I feel like the current environment, what is happening is, and the fear of missing out based on the macro idea. And of course, we just talk about it, the idea that the debt levels are too high and the only viable option is to just inflate it away. And that's what every government for the past centuries have always have done, because it's the easiest choice to make. It's the less risky politically wise. So at the same time, we all know that that's going to be the end game. But the problem is that knowing the end game and positioning for the end game right now could cause for a lot of investors problem in the next recession in the short term.
Yeah, so that's kind of like what I view as well, because like I know that there's a lot of potential downside for some of these equities. I mean, a lot of these equities don't they don't go up in a straight line. That's one thing, and then right now, as we're seeing like the risk assets really plummet, we are seeing like energy holding up because of inflation. But once we have that demand shock or whatnot, I'm kind of like hedging in that way, where it's like, okay, well, we could have a demand shock with energy and a lot of these other commodities. I mean, because if people aren't buying cars, then then obviously that's going to affect whatever commodities that are behind that, or whatnot. But coming out of that recession, we did see this in 2008 with commodities. And so like I get what you're saying about like some people are positioned for the long term, but in the short term, we're probably going to see some more downside. And so you want to be either hedged or you want to have some actual cash available, which Rick Rule talks about, having some cash to be able to buy, cheap opportunities, because it's going to be very volatile.
Exactly. That's what I'm doing personally, like with my personal holdings. And right now I'm 100% in cash. And I just like it. And I'm just shorting the market through options, and they just require buying power. So I'm not even like buying them, because I am doing like synthetic short positions that don't require like putting up cash to set it up. And
Yeah, that's interesting. I haven't heard
can you
anybody.
hear me?
Yeah, I can hear you. Yeah, so that's interesting. I haven't heard anyone 100% in cash, but yeah, you have a strong conviction about how this is going to play out.
Yeah, because I feel like the main problem right now is that there is too much FOMO right now. and people are more afraid of not making money rather than losing money. And when this is the broad sentiment, things usually don't end well. At the same time, what I really learned through studying and doing like hours of research is that, as Drunkabiller said, what really moves markets is liquidity. Like liquidity is truly the king and moves everything. And right now, liquidity is getting out of the market. So everything goes down, dollar goes up, and that's it.
Yep. Yeah. Especially with the Fed tightening and they're sucking a lot of that liquidity out of the system or whatnot. So how do you see this playing with like energy in the short term? Obviously, we could experience some downside. I know like certain sectors like uranium is very volatile, very volatile. I experienced.
Well, I'll be honest with uranium. I feel like the main problem with uranium right now is that there is a lot of retail traders inside this sector invested. There are a lot of retail traders that are invested, and a lot of them, they don't really know why they're invested. And the only reason why is that because they watched a video on YouTube and somebody talked about it and somebody said it was like the biggest opportunity. But like, if you really ask them, okay, but like, do you know what's uranium? Do you know what uranium is used in, like a nuclear plant? They probably don't know the answer. So, and the problem with those investors that are in the sector is that those people have weak hands. So the moment that the tides turn, they will sell. And so that will be like other liquidity that goes out. But of course, for people that know what they're buying, there'll be an opportunity.
Yeah. Yeah, and they're also like putting a small portion of their portfolio in at a time. So like whether that's averaging down or whatnot, they're not like you mentioned earlier, going in 100%, they're going like, maybe 1%, and then, okay, well, now it drew down a lot more. Let me put another 1% in. And so they're playing it a lot more smarter than just buying. And then when the price goes down a lot, then you have a liquidity problem because you didn't, didn't have the cash available.
That, I mean, if they're like, for the investors that are doing that, that's wonderful. Like I'm referring more to the investors that are like narrative driven. So they just like search on the web on the new hot thing to invest in. And I mean, for a while it was silver and then it was uranium. I mean, if you go back, let's say 5 years, nobody was talking about uranium. I mean, a few people, of course, and those few people invested then and they made money. But, so I feel like a lot of narrative is in the market right now and people should always be careful about it.
Yeah, for sure. Yeah, that's good. And that's a good note to leave us off on. So how can the audience connect with your content and connect with you on YouTube, TikTok, and what other platforms can they connect with you at?
That will be just like looking for Avanguardia Investment Media, and they will find me. If they look at TikTok, they will find me. Same on YouTube and on Twitter.
Okay. Yeah. Appreciate you coming on, Giorgio. We got to do this again.
Thank you. It was a pleasure.
We got to do this again. So I really enjoy your insight and just the perspective you bring to the table.